Welcome to the PFS podcast. We are Paler Financial Services and are going to be covering various financial topics and current events.
Mark Paler here for Paler Financial. I'm sitting with my colleagues Jameson White and Mark Mogul, and we were thinking about taxes. Just so happens, as a CPA and financial planning firm, we prepare taxes for about 500 families. And we get deeply involved into the nuances of the law to the extent that we don't want anyone to pay more than their fair share and be able to leverage up the opportunities that are presented within the tax law. Just so happens that my colleague Jameson White has spent an extraordinary effort studying for the Enrolled Agents Exam, which is the professional license that the IRS provides those to be able to provide tax preparation services. Jameson, with that said, what do you think?
So my key takeaway from all of my studies is that taxes are complicated. And I think what that boils down to is the Joe Schmo that's giving you advice regarding how you should file your taxes in this specific regard, or more generally, this what we call social media advice that we're receiving across the board from anyone saying that if you're paying a single dime of taxes, that you're wrong and you shouldn't be, that there's ways to kind of manipulate the system. And while there are ways that you can tax plan and avoid paying taxes and be tax efficient, it's not always a retroactive thing. Tax evasion will get you put into jail and hot water very quickly. Tax planning and looking forward to future years is how you get tax efficient situations. And then also coming from the financial advisor side, tax is interwoven in everything. And so especially when we're talking about money and talking about investments, being tax efficient in our investment strategies is one small way that over time can have a very large impact on the results.
Well, for goodness sakes, if anybody out there isn't taking advantage of all the privileges incorporated in the tax law, they're really missing out. And it can be as basic as participating in your employer 401k plan, or contributing to your health savings account, or possibly putting money away in a college savings account. As Mark Mogul conveniently says, part of the tax law is about behavior management. And with that said, what do you think?
Thank you, Mark. As I think of taxes, I remember one of my favorite college professors, Dr. Howard Newell, discussing the purposes of taxes. And he said, the purpose of tax is really one of two things. Number one is to generate revenue, and number two is to shape behavior. And I might actually say that those possibly should be reversed in terms of importance. I think when we look at the tax code, shaping behavior is often the primary focus, and generating revenue, while important, is almost secondary to shaping the behavior. When we look at the debate between, or the discussion between, the itemized deduction and the standard deduction right now, the standard deduction is so high, I often find it interesting at the end of each year where you get all these charities and nonprofits who are running ads saying you can donate whatever it may be for a tax-deductible gift. And while it may be tax deductible in definition, it might not actually benefit you in the form of an actual tax deduction, simply because the standard deduction is so high. Right now, the stats that I've heard are anywhere from about 80 to 90% of 1040 individual tax filers end up claiming the standard deduction simply because their itemized deductions don't exceed that standard deduction. So of course, I'm not encouraging you not to be charitable. Be charitable and give out of the kindness of your heart. But if you don't get the tax deduction to go along with it, appreciate that you have a very large standard deduction right now in lieu of that charitable tax deduction. Another thing that we want to consider when it comes to the itemized and the standard deduction right now is, of course, the Tax Cuts and Jobs Act, or TCJA, which will be expiring or set to sunset 12/31 of 2025. The conventional wisdom that we're hearing out there right now, not to get too political, but given the fact that President Trump is now back in office, with control of the House and the Senate, a lot of people believe that the Tax Cuts and Job Act is going to be extended. While that may very well be true, as doubling down on tax law that was originally initiated under Trump presidency number one, or the first term, I actually might want to take a counter argument there. And that is that this current administration appears to be wanting to really stir the pot and change things up economically and on a number of different fronts. And one way to do that, as I just mentioned, in shaping behavior, could be adjusting some of the existing tax law under TCJA. And so that may be reducing the annual gift tax amount. That could be possibly allowing the estate limits to possibly sunset or change, encouraging the changing of hands, possibly lowering the standard deduction to encourage more nuanced behavior in people tracking their itemized deductions. And so those are just a few of the examples of ways that tax law can impact behavior. And I am not saying that that's what's going to happen, but I'm just floating that out there as another option or another potential.
As we operate within the practice and doing financial planning, investment management, and tax preparation and integrating those so it's seamless and productive for the benefit of those that we serve, we understand that there are certain nuances here that may benefit those and some that don't benefit others. The reality is that what you can't get online from one of these free tax preparation services is any insight, advice, guidance, or support to be able to modify or manage what you're doing for your own benefit and possibly not the government. We're not a big fan of government regulation, taxing, spending, or operation in general, but the fact of the matter is taxes are important, and being aware of the law, adjusting to the law, and modifying our behaviors so we take advantage of that is worthwhile and valuable. I'm going to leave you with one last thought. For those people that do use the standard deduction and are retirees who get required minimum distributions, appreciate the fact that you have the possibility of using a qualified charitable deduction. You may want to look into that. And if you have further questions, give us a call. Our phone number is 303-858-0045. The information presented is not intended to constitute advice. We relied on sources we believe to be bona fide and accurate. Each person is responsible for exercising independent judgment in determining whether the information provided is appropriate for themselves.